Which YieldMax weekly paying dividend ETF gets you the most for your money? When I started this challenge where I put $100 into every single weekly payer, I wasn't sure what the results were going to be. But since then, we've had some crazy payments and some really successful ETFs in this weekly income space. Today's video, we are showcasing the power of the YieldMax weekly payer, specifically with the fan favorite ULTY that has been making some crazy achievements just as of late. I'm really excited. There's some new news on that one as well that I want to discuss. Some things I may have gotten wrong with it that I will want your opinion on for sure. If you guys are interested in weekly dividends, in dividend income, you are in the right place. Don't forget to like the video and to subscribe so you don't miss out on all the future free content and you'll know which ETFs are making investors the most income. Now, let's roll that intro. Starting off with what I think is the most underrated weekly paying dividend ETF by YieldMax. This is CHPY. If you're a fan of semiconductors, it is for you because it is their semiconductor portfolio option income ETF. Now, we're going to cover a lot of things for each of these individual ETFs. We're going to look at their chart, their last dividend per share. We're going to look at their AUM and their dividend yield. So AUM is assets under management. It basically showcases the popularity of the ETFs. And now popularity, not necessarily by number of investors, but by amount invested. Because you can have one investor put $1 million in and drastically shift the AUM. Then we have the dividend yield. It's a trailing 12 months. So if it hasn't paid out for a full year, which usually I don't buy things if they haven't paid for a full year, but you may be different, that's going to be a skewed yield. So for example, CHPY started paying in April and we are not anywhere near April of 2026. So it's not going to be accurate. This yield, it states it's about 12%. It's probably closer to the 40 or 50% range. And again, it has a $29 million AUM. Very impressed with CHPY and the price has just been amazing. Look at this increase. Even since I bought it at $51.83, it's all the way up to almost $55. Well, it was, and now it sold back off with the market last week. So now this is the dividend per share. The reason I talk about per share is because I like for you guys to compare them, but you also have to note the difference in price. ULTY is $6. CHPY is $53. It's going to be a vast difference in the percentage paid out. So we can see that's why dividend yield is so important. We had 35 cents, then we had 37 cents, 37 cents, and 41.5 cents. And I do get comments about why I would even mention the dividends per share, but I also think it's very important to showcase if they're rising or dropping, which is also what we're going to do on our dividend tracking spreadsheet, which is available at spencereinvest.com and linked in the pinned comment below for those that are interested. You guys were asking, so I finally got everything worked out. Took me way too long. But now let's jump into our next ETF. I also want to state we are in a very green market. Yes, we had a drop day Thursday or Friday. We are in a very, very green market. So a lot of these are doing amazing, which they should do in a green market. Would they hold up in a red market? Not likely, like we saw with YMAG and YMAX that took a beating, but we'll get to those. So we can see GPTY, it's similar to CHPY, but it's AI and tech instead of semiconductors. AUM 45 million and a dividend yield trailing 12 months of 16.5%. Last couple of distributions, we had 29.5 cents, 29.5 cents, very consistent, 32 cents, and now 31.5 cents. So distributions seem to be staying relatively steady. The price has bounced back up, which I really like to see that it went up to almost $48, which is amazing. And I love when we can buy it and hold it for the distributions or the dividends, but also get some price appreciation. Okay, I need you to listen to me. Coming close. I need you to listen to me. I think I figured out LFGY. This is the crypto industry and tech portfolio option income ETF. And what I mean by figured out is it pays out the most in distributions than I think any of the others, maybe not ULTY, but it has a lot of struggles with price, as in it drops heavily and quickly, and it doesn't go up as much in price. So that's where you're sacrificing. This one pays out probably the most in distributions or up there with the most. And it has some of the, I wouldn't say worse, because there are some that have been much worse with price performance, but it has slower growth and faster drops. So that's my opinion, not financial advice, but the AUM is pretty crazy, 180 billion. This one is growing quite quickly. Dividend yield of almost 39%. This one has not paid out for a full year, but we're kind of getting close, a few more months to go. And so that dividend yield is probably in the 60 to 70% range, if not more, which is wild, and that's why the price seems to fluctuate rapidly. Last couple of distributions, and if you don't believe me, look at what it's paid out as a $36.50 ETF. We had 48 cents, we had 48 cents, for almost 49 cents, and now 47 cents. Pretty solid and relatively consistent on top of that. QDTY is their zero DTE covered call strategy ETF. And I made a mistake with this one. I bought it at the low, which is not a mistake, but I was supposed to buy it initially and I messed it up. So we have 3 zero DTE ETFs from YieldMax. Now they're trying to fight with Roundhill that has 3 of the same. But we can see QDTY is not very popular. We have 11 million AUM, dividend yield of 12.71%. Last couple distributions, we had 19 cents, 19 cents, 19.5 cents, and 17 cents. So not very high payer either, but I do believe the zero DTEs are a little bit safer. It all depends really on your investment strategy. But buying time is also very, very important because had you bought this on launch at 46, you'd still be in the red on your initial investment. If you did what I did and accidentally bought it when it was lower, $39, you'd be in the green like I am. And QDTY is one of our best performers because of that very reason. RDTY is the same as QDTY, except not on the NASDAQ, it's on the Russell 2000. AUM is very small, 5.5 million, and a dividend yield about 15%. This one, I thought I bought it lower in the 30s, same with QDTY, but it's saying I bought it higher up at almost $45. Not sure what happened there. Kind of a bummer because that's really going to hurt our overall return, but I can't believe I only am noticing that now. Last couple of distributions, 30 cents, 33 cents, 39 cents, and 35 cents. RDTY does pay higher, and I believe that's because the Russell 2000 has more implied volatility because it's on smaller companies than the NASDAQ and the S&P 500. But we did see this one fall a little bit in price as well, but not as bad as my buy on XDTY, which is our next ETF. It's very interesting. These zero DTE ones are not popular. I mean, we can see by the AUM, 13.5 million. And I was on Spaces talking with some of the YieldMax employees, and they were asking me why I thought that was. And I was like, well, to be honest, everyone loves ULTY and YMAX and I mean, LFGY. So that's kind of the reasoning behind it. I think they're just less popular because the dividends aren't as solid. But let me know in the comments, are you guys holding any of the zero DTE ones? Because I'm going on Spaces with them again this week on Wednesday, which I'm very excited for. So we can see the distributions, nothing crazy. The dividend yield 12%, but SDTY is just a low payer. And I think that's why it's less popular. 14 cents, 15 cents, 16 cents, 14.5 cents. And it's a $45 ETF. So it's not cheap by any means. And I mean, let's be honest, this one's paying out 14, 15 cents. You can have ULTY paying out 10 cents per share and it's $6. So that's kind of why. I should probably tell them that. We'll see if it comes up in conversation again, but those are always really interesting. And I am on X or Twitter now if you guys are interested at following me at Spencer Invests. Here's where I need your help, and I may have made a big error for ULTY. Andrew sent me an email talking about ULTY and the strategy switch. So if you guys didn't know, there was a big strategy switch right around here where I purchased it. Now, when I originally read the prospectus and I watched some videos on it, it was talked about that the strategy of how they wrote the options had changed. Not just that it shifted from monthly to weekly. And that was why I was interested, because all of a sudden it started doing a lot better. But we also saw a crazy reversal in the market. So what I need to know is, did they even change the strategy? I didn't realize they held the underlying prior to the strategy switch. I thought they had converted after, and that's what made it so much better, but maybe not. And if I'm mistaken, I am very, very sorry. I don't want to lead anybody astray with these ETFs. So that being said, what confused me with this is the fact that ULTY was dropping consistently even in a good market. So why would switching to weekly and now being in a good market showcase a lot more growth? Is this because the AUM is huge now at 2.6 billion? The dividend yield's roughly 80 to 90% depending on the payouts. But let me know, and if I made a mistake, I am so sorry. But we are in this together. I'm going to make mistakes, unfortunately, because I am human. But let me know what you guys think and what you know, because genuinely, Andrew, you reaching out via email, you made a lot more sense. And he had links and everything to back it up. So I'm curious, did they even switch the strategy? Did they actually change up what they were doing with the options and holding the underlying? Or was it just because the market's really green? Because if it is just because the market has gone really, really green, I'm going to be careful with holding ULTY in any sort of rocky market. Let me know what you guys think. Let's still check out the last couple of distributions. We had 10 cents per share, 10 cents per share, a little over, 10 cents per share, a little over, and 10 cents per share again. We did see a drop in price. It went from about 640 down to like a little over 5. I don't think it actually touched 5, but it did get close. Now we're back up to 612. Is it going to drop occasionally? Yes, but the reasoning behind that isn't just NAV erosion, if you want to call it that. The fact of it is that it holds these securities. The entire market was down on Friday. So I'm not surprised that it would drop because the underlyings are going to drop and they're high implied volatility underlyings, meaning you get juicier premiums. But with that, you sacrifice, because they're technically riskier, I would say, investments. I'm still a fan of ULTY, although my opinion may have shifted a little bit, and I'm going to keep you guys in the loop on that. I'm still going to be tracking it no matter what, but please let me know if you guys know and leave me some sources. I need to read up on this. I should have done more prior, but I thought I was listening to the good sources. I definitely was led astray if that is the case, and I don't want to confuse anybody. Let's jump into our two fan favorite ETFs, YMAG and YMAX. Here's my problem with YMAG and YMAX, to be honest, is when I initially bought them up in the $19 to $20 range, it was great. They were paying out good dividends. Since they fell with the market falling, they haven't recouped that loss, and that is definitely unfortunate. But we have a almost $400 million AUM with YMAG, $376 million, dividend yield of 50%, and we're almost to a full year of weekly dividends, but not quite. We can see it paid its first weekly, September 19 of 2024. So I do want to see some price appreciation come back into these. I need them to rise up. They are not going up, and I don't know why. We have been in a very green market. Why are we paying out so much if we're, sacrificing some of the growth or at least bounce back volume to get us to where we were? Just my thoughts. YMAG didn't have a great distribution. They paid 12.5 cents, 15 cents, 20 cents, and now 7.5 cents. All of this does depend on the Magnificent Seven, the underlying YieldMax ETFs on those corresponding stocks, which is why sometimes you're going to have a really good week and the next one will be really low because of the cycle of 1 week. 1 week of every month, it's only one underlying paying out. I think it's Microsoft. It's their Microsoft fund. And that's why it's a little bit lower. You only have one compared to the other weeks where you have double. As well as if Microsoft has a boring week, there's not a lot of implied volatility on it, or a low month, I should say. Boom. It's going to be a little bit lower. But I still like YMAG. I don't hold it. I did sell it to buy some other of the crazy weekly paying ones. Some by Roundhill, some by GraniteShares. Things have been going nuts lately, but I am still a fan. I do still hold YMAX, so let's check it out. I have been a little bit bummed. Look at this. It still fell from 18, but we're not rebounding in price like we should be. We have a $1 billion market cap. Congrats to YMAX, 1.02, and a dividend yield of 64%, which is almost accurate. It's going to be somewhere around there. Now, again, same spiel with YMAG. It's just not picking up like I had hoped. Last couple distributions, we had 13.5 cents, 10.5 cents, 18.5 cents, and 16.5 cents. The distributions for both of these are a bit all over the place. It's kind of what you can expect because of the underlyings. But all in all, people argue YMAX versus ULTY. I'm going to side with ULTY at this moment. Let me know what you guys think. And now we're going to jump into our dividend tracking spreadsheet and showcase not only how much money these paid me, but the overall best performers in this account. So we're going to start by looking at all of our weekly payments. When we're looking at this, it's not per share anymore, it's per money invested. And if you want to know the exact amounts of what I've invested, you can follow me on Blossom, or you can wait until the second part of this segment where I'm going to showcase the amount invested in each. So YMAG. We got 46 cents. Not great. Less than half of our last payment. Kind of a bummer, but that's what happens with the cycle, right? It was 34 cents a couple of weeks ago, which was a hard one. YMAX, we got $1.07. Very good. Over $1. I love to see it. I really do love to see it. But remember, we have more than $100 invested in YMAG and YMAX. So they're not paying more than LFGY. They're paying less because we have less money invested in LFGY, but we'll get to that. LFGY, 95 cents, absolutely amazing. Keep doing what you're doing. Love to see it. GPTY, a sleeper, doing really good. Bounced back, 63 cents. SDTY, 29 cents. RDTY, 69 cents. And QDTY, 34 cents. Well, RDTY was pretty solid. SDTY and QDTY, not so much. They're just lower yielders. And if they can hold up their price better, that would be fine. But we have to see that take place before I'm going to dive headfirst into all of these 0DTE ones. I sold out of the Roundhill 0DTE ones for the same reason. They weren't performing as well. Then we have CHPY, my fan favorite. I love it. I think it's hard, CHPY versus ULTY, but I think CHPY is just so slept on, which for many older people out there that aren't on, the newest lingo, that means that it's underrated. And then we have ULTY, $1.77. Absolutely amazing what this thing is able to pay out. I cannot believe it's still paying out so highly, and it hasn't dropped in price. So even if it is, people call it a scam, they call it a sham, they call it whatever they want to, it's made me money. And that's all I'm gonna say. I'm not gonna argue. This week in payments, we received $7.03, a little bit lower than our payment last week, which was $8.10. But that's what happens when we have a bad week with both YMAG. YMAX was a little better, but we did see some lower distributions. Can't complain though. That's pretty solid. I invested $900 and it's paying me $6 to $8 a week. That's pretty good. That's pretty good. And we're relatively diversified with all the YieldMax weekly payers. Very interesting. We're going to jump into our positions tab, and I'm going to tell you exactly what our biggest winner and our biggest loser are in this account. We can see all my tickers, my number of shares, average cost per share. So if you guys don't know, you input in the ticker, it auto displays the price, blah, 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 all of this stuff. And then you have to input in anything yellow. So if you guys are thinking about getting this, it works very interestingly. It's very cool, but it pulls data from all over the place. So you do have to put in your number of shares and your average cost per share for it to give you the correct amounts. And then you do have to put in the distributions yourself, which I do anyways, but just so you guys know. So sliding over, you can see 52-week range, good stuff. And we have our return. We have our total return and our market return. Market return is just our invested capital and what it's worth now. So it's not actually what we've made. It's not including distributions or the dividends. So total return, we have YMAG at almost 18%, YMAX at 19.25%. But remember, we have been trading these for almost a year now, almost about 10 and a half months. So they have been around a lot longer than some of these other ones, and they're still not performing as well. They've seen some worse markets on top of that. So remember everything with a grain of salt. LFGY was a newer one, but it's had some months of trading now, and it is down, unfortunately, despite the massive distributions. GPTY, 10.81%, fell down from last week, but still one I'm watching very, very closely. Friday really took a toll on a lot of these, on a lot of the weekly payers in general. XDTE is up 3%, RDTE is up 13%, and QDTE is up 28.78%. It's our second best performer, all because I mistimed my buy on accident. And that just goes to show you, anybody can make money, even on accident. I didn't even mean to. It wasn't a plan. I didn't think, oh, now I'm going to buy it because the market's going to reverse. I got lucky. And if you're used to watching, okay, first of all, I'm going to have a tangent. YouTubers are not financial advisors. We are not. I track data. I love data analytics. I love watching what's making me the most money. I love distributions and dividends. Do not come to me for financial advice, please. I love talking with you guys about stuff in the comments, about what you like, what's been doing well for you. I see a number of growing YouTubers selling services as financial advisors, and they are not. They're not. Some of them, I'm going to be honest, aren't even good investors. And that's just the honest truth. People come on here and you build a platform. It doesn't give you the right to sell financial advice to people and claim that you're not. It's what people are doing. So anyways, tangent over. Do what you want to. If you want to pay a YouTuber more money, we make money on the content as well. If you want to pay them more money, be my guest. But I'm not a fan of that. And you guys know I've talked about that from the beginning. You can do everything on your own. Learn it your best way, just like I have. We're in this together. Anyways, big tangent. CHPY is up 18%. Again, a sleeper pick for me. It's doing really, really well, and I'm very happy with how it's been performing. I don't own it yet. I really should buy it. And then last but not least, we have ULTY up 28.80%. That's amazing. Absolutely amazing. It did drop a little bit from last week. It's kind of stayed stagnant with the volume. Volume's been going up, but with the price kind of remaining around that lower sixes now that it fell off, even with the distributions kind of counteracting that. But I'm not going to knock it. It's doing amazing things. So what we can see here is our cost basis and our market value. And this is what I mean. So I bought YMAG $115 worth, but it isn't paying out as much as LFGY, which I only bought $105 worth. But LFGY has unfortunately dropped significantly in price. Same with YMAX. GPTY is holding up a little better. SDTY, the zero DTEs are okay. RDTY and QDTY being the best. I mean, QDTY is up $10. Let's go. Price appreciation. And the dividends, even though they're lower, they're all bonus because I'm still making money. CHPY is up $3 and ULTY is down $3. Very interested in seeing how these continue to perform and if we're going into a red or green market. You guys, let me know what you think, please, in the comments. And last but not least, our total dividends or distributions. So I'm not going to read through all of them. You guys can see them, but since I bought these at different times, it's hard to compare. But I will say LFGY is one of the highest payers and ULTY is one of the highest payers, considering I bought it in March. So it has been trading for significantly less time than YMAG and YMAX, and it's steadily approaching their total amount paid out. So again, if you guys are interested in tracking your monthly dividends, your weekly dividends, SpencerInvest.com or the pinned comment down below. If you want to even check these out, it's on sale right now for $5 off as like a woo, we did it. I finally got everything set up and it took me way too long. But I appreciate you guys. You can also get my free cheat sheet on there of all the weekly payers, the days they paid, and their trailing 12 months, which I'm going to be updating. And if you're on my email list, you will get the updated version sent to you automatically. Thank you guys so much. If you enjoyed this video, check these videos out right now, including this one on the best income ETFs with the zero NAV decay. I think you guys are definitely going to like it. Thank you so much. Like and subscribe, and I hope to see you in the next video.